Hi there, and a very good morning and good afternoon to all of you, depending on wherever you're watching me. And this is Simply Stocks. And in today's video, I'm going to talk about a very interesting company. So let me open this up. I believe MASTEK can be a potential champion going forward. So we'll discuss about it in detail. First, I'll discuss about its business, and then I'll also discuss about what I feel with respect to as to where the stock is headed and why I feel now that there is a potential very little downside. So there's a huge margin of safety, and we can look at a potential upside, which could be in the range of 2 to 3x over the next 3 years in the stock. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. So before I talk about MasterTech, here's a small request: kindly support me on Patreon. Once you do that, help me grow the channel, help you also ask me questions and ink out answers in greater detail. Once you get a $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk or a number of stocks you're holding, you can directly email me and we can work things out with a fee. And also, you cannot pay on Patreon through cards. You can become a member on WhatsApp on a yearly basis or take a YouTube membership as well, and you get all the benefits. Now about the company, MASTEK was established in 1982 and they provide digital service across, you can say all across. They provide digital solutions, enterprise services and automation processes. And they have acquired Evosys just for a couple of years back to fuel its growth from 2020 onwards. Plus they had two, three more acquisitions across the board, which should help them from FY24, FY25 onwards to generate a very decent amount of, you can say, revenue compared to what they were doing earlier. Their major businesses are in agile consulting, application support and maintenance, digital commerce, application development, business intelligence and assurance, and testing. The market cap of the company is around 5,000 crores. So let me just discuss about the company in detail by going to the Screener website and looking at how the stock has done or is performing and why I believe that it looks attractive now after such a fall. So basically the market cap of the company is under 5,000 crores. It is around 4,900 crores or so. The stock has stabilized around these levels of 1650 to 1600 levels, around this 40-50 rupee range. The stock has stabilized. If you look at its 52-week high has been 3,400. In fact, its all-time high has been close to 3,600, and the stock is more than halved from those levels. Its low was around you can say 1,500. So if I take that, then we are looking at something of a decent decline, around 58-59% fall that we have already seen in MASTEK. And now I feel that with Europe and US, and especially Europe, getting back to normalcy, I feel that MASTEK is all set to perform much better. And going forward, say from FY24 onwards, numbers will look even better. And we'll discuss about the numbers in a bit. Let me just discuss about the company per se and how things are panning out here. So established in 1982, as I mentioned, and they are into verticals focused on enterprise technology, etc. Uh, these are services offered that I have already discussed. So let's just come to revenue breakup. Till FY20, how was the revenue breakup industry wise? So government was around 38%. Uh, Health sector was around 23.5%. Retail was nearly 15%. Manufacturing and technology was around 13.5%, and financial services was around 11%. So there's a decent division with respect to the industries that they serve. Basically they serve government, and in that government orders they get major orders from the UK government, and that is where the company has suffered over the last year or so, because there have been a lot of turbulence with the UK government. As you would know, that there have been prime ministers changing there, and there have been a lot of political issues. Apart from that, in UK, there has been a lot of issues with respect to, you can say, the economy there. Economic situation is not that great, and we are looking at very desperate times for United Kingdom with respect to the winters. So hopefully by summers things should stabilize there and numbers should start kicking in. In terms of service wise, digital application accounts for 45% of their business. Oracle Cloud and Enterprises accounts for 33%. Now, this is where they have done a recent acquisition in which Oracle Cloud Computing business of another company has been acquired by MASTEK. And hopefully, going forward, I believe that. This is going to really fuel the growth with respect to the top line, and hopefully numbers on the bottom line will be even better. Digital commerce accounts for around 11.5-12%, and data automation and AI is only 9.7% at the moment, but it's pretty decent enough, and hopefully it will grow going forward as well. Its top 5 clients here, its top 5 and top 10 clients accounts for 30 and 43% of the revenue respectively. So it is concentrated in that sense that top 10 clients are the basic uh, revenue generators for them. In terms of geographical presence, their presence is in US, UK, Netherlands, Canada, Australia, India, Malaysia, Singapore, and various countries in the Middle East. And in FY22, UK and Europe accounted for 68% of the revenue. This is the uh, most important figure in the whole of this presentation that you would need to understand. And so UK and Europe accounted for 68% of their revenue, and that is why the stock is down 58% from the top, because UK and Europe has gone through a war, a very difficult geopolitical situation, a very difficult political situation in Europe, in UK especially. And so things should now start to smoothen out over the next 3-4 months. And uh, USA accounts for around 17.7%. And again, USA, America is not doing that great on the inflation front either. Then Middle East is around 8.7%, and rest of the world is 5.6%. So pure play on global economy, and hopefully what I feel is that things are now peaked out with respect to troubled waters that is there from the globe. So hopefully we'll see numbers panning out much better. And this is the, you can say, biggest facet for the company. 12 months order backlog as on Q4 FY22 was around 193.8 million dollars. So that's around 19.3 crores uh, dollars. If I get that in rupees, it's around 1500 crores. And if we look at their and I'll come to MST solution acquisition, but let's just dealt with this number. 1540 crores of, you can say, uh, sales that is going to come through over the next, say, if this backlog ends in the next couple of years. What they are producing at the moment is around 660 crores. So on an overall basis, around 2500 crores of sales is what we are expecting in FY23, and 1500 crores of revenue is what we are looking at coming in at probably in the next 1 year, and but for sure in the next probably 2 years or so. So that is actually 60% of more than 60%, 61% of their total revenue that they are clocking at the moment, that is going to be coming in if things smoothen out in Europe, especially in UK. We'll see that happening. Now, coming to the acquisition part, as we were talking about, Evosys I have already discussed. I'll discuss the numbers here in detail. Uh, MST Solutions, it is a Salesforce. Now, this is interesting. It is a Salesforce consulting and integration which has nearly dominated, you can say, unique capabilities, particularly in healthcare, state and local government, manufacturing, and financial services in the Americas region. So through this Salesforce solution company, MST Solutions. What right now is being done by MASTEK is that they want to penetrate this 17% that we were talking about. If you look at geographical presence, this 17.7%, they want to increase that as well as penetrate this market big time through this. And if we go further, we are looking at another, you can say, uh, acquisition along with Evosys that they have done. And in that sense they have done a decent acquisition with 65 million US dollars in cash, and there was also equity consideration. So the total purchase consideration for both the acquisitions was around 806 crores, which also resulted in a goodwill of around 380 crores that is retained. So when you acquire a company, couple of companies at 800 crores, plus you have a backlog of around 1500 crores of revenue coming in, I don't think that's going to affect a lot on the balance sheet, as we'll discuss later on as to how the balance sheet would look like. It won't have you can say a very detrimental effect on the balance sheet, and that's why I believe that this is a very decent acquisition, and going forward will be a lot margin accretive to the kind of business that Mastech is doing at the moment. Now let's come to the numbers part. So in December, the numbers were not that great, and that is why the stock is where it is. So 660 crores of revenue. I'm sorry, 660 crores of revenue versus 552 crores earlier. Uh, so this has been a jump of only 20% year on year. And what has happened is that margins have dipped sharply from 21% is down to 17%. But what we are looking at is in the last 2 quarters, the margins have remained stable at around 17%. And in a very difficult environment just before the pandemic, and when the pandemic hit most parts of you can say the world, the margins were around 14 to 17%. We are back there. So basically I believe that the margins may just bottom out in the next couple of quarters. We may see this 17% go to somewhere around 15% at worst, and things will start looking up from there. So overall what I feel is that this year, if I look at yearly numbers, profit and loss, in March 22 they did around 98 rupees EPS, 333 crores of profits and 98 rupees of EPS on sales of 2100 crores. This year, I feel that 2500 crores of sales should come in at 18% revenue, 2500, 2550. They're going to do virtually the same, around 98, 99 rupees of EPS. But next year, say from FY24 onwards, things should look up. So I am looking at, or we are looking at a 20% CAGR growth on profitability again. Uh, if you look at the numbers earlier, so let me just give you an idea as to how things have panned out over the last 6 7 years. So in March of 2015, if we look here, they had a net profit of 18 crores. In March of 16 it was down to 14 crores and wasn't looking that great. But in 17 and 18, look at the numbers, from 32 crores went to 70 crores, went to 101 crores in 19, and went to 114 crores in 20, which wasn't that great because of the March quarter, which was a, you can say, a deterrent. But in March of 2021 we see 250 crores coming in, and March of 2022 we have 330 crores coming in. So there could be a couple of years of lull here, 1 year of lull, and probably 6 quarters of difficult time, but things should start moving forward pretty quickly. I think it will be around 330, 340 crores again. But then I see 20% CAGR growth in you can say profitability. So if we take that, if we say 99 rupees, and if we say 20% from there is around, you can say 20, so it would be 119 rupees EPS in FY 24. That's what I expect. And a further 20% jump in this to around 23 rupees EPS jump. So that is around 142 rupees in FY 25. 5. So in FY25, I see 140 to 145 rupees of EPS. And now coming back to the fact that where the stock is trading, if we believe that 140 rupees of EPS is very much possible in a couple of years, let's see what is the current PE with respect to such, you can say, a growth if that happens. So if I say that currently the price is 1650 rupees and we see that our company would do 142 rupees, then our EPS comes out to be 11.6 rupees, and that is where the you can say the real value lies. I don't see this I don't see it difficult for this company to do this because of the kind of acquisitions that Mastech has done. I believe, and let's look at the PE on a 3-year basis as to how PE has panned out, and then we'll be able to understand. So on a 3-year basis, the PE peaked in let me have a look in detail. So in October of 2021, when the market was doing so well, the PE was around 34 with an EPS of 95 rupees. And now, after the fall and everything, the PE is closer to 17 rupees. And normally it bottoms out around 15 rupees or so at a PE of 15. Uh, Now, the thing is, what has been the average PE over the last 3 years for the company? It's around 17 rupees, where the stock is trading at the moment. So I have a feeling that even if at 142 rupees, uh, we have a PE of say, uh, see, even if the PE is around not 34 but not 17 either, somewhere in between, if we take that, say around 25, then we are looking at 3500 on the stock easily. So 3550 easily is a possibility, which means a doubler from here over the next 2.5 years is a possibility on Mastech. I think it can easily be a 10,000 crore market cap company. Currently, it is trading at 2 times sales. So as I mentioned, 2,500 crores of sales, 5,000 crore market cap. I think it is trading at 2 times sales. Very interestingly poised the stock is, and hopefully going forward, this is something. This is something that we need to keep a decent eye on, that the stock should end up doing pretty well when we consider say 2 to 3 year time frame. Going forward, let me now understand, or let me give you an idea of the balance sheet. So basically reserves have increased tremendously from around 450 crores in 2017 all the way to 1200 crores in 2022. So this is 2.5x with respect to reverse. And as I mentioned, debt, although they have taken some debt, but still 400 crores of debt is not that big considering they have an order backlog of around 1500 crores and so much cash on books. So I think this is working capital debt, and should be fine on that respect. Uh, Now let's come to the shareholding pattern for the company, and this is the December quarter shareholding that has come out. So promoter hold 37.27%. This is where the big change has happened. So in June of 2022, FIIs held around 8%, and in September and December they have increased drastically. So 13.04 has gone to somewhere around 13.25. So from 8%, there you can say acquisition spree has been so much that 5.2% has been the increase in acquisition through FIIs. DIIs have also started increasing after dropping in September to around 3.73%. We are looking at 3.9%, and we are hoping that probably going forward, this will increase as well. So that's where the public shareholding has dipped. In terms of public shareholding as well, we look at large investors, a number of large investors holding fort in the stock. So around 4 plus 4 and 5, so around 13.5% is with, you can say, potential very large investors, and so going forward, I believe the stock is set to perform pretty well. Uh, I think this would be so if I take out 13.5% from this 45 and a half, then we are looking at somewhere around 32% with the, you can say, with the number of you can say retail investors, but rest are with strong hands, or the stock is with strong hands. It is a small cap company that is trading at two times sales, and that is set to grow at 18-20% in 2-3 quarters time over the next 2-3 years. So I will not be surprised that in FY26, that's 3 year down the line, their EPS could end up being somewhere around uh, let me give you an idea here, somewhere around 170. So 3 year hence from here, I think IT should start performing from second half of this calendar year, which is the second quarter of next financial year, and 170 rupees of EPS by FY26. I think in the next you can say 3 to 4 years, you could very well see the stock trading at 4,500 or so, from the current, you can say, 1,600 or 1,650 levels. So that's a 2-3x there for you. So very decent company to keep an eye on, probably to accumulate at these levels and on dips from a 3 year perspective. Very little margin of, you can say, very big margin of safety, very little downside, because if you look at the PE of the company at around 17 times, uh, on a 1 year forward basis, it is trading at only 11-12 times, and that is where, sorry, 2 year forward basis is trading at 11-12 times, and that is where I believe that downside is limited. So this is perhaps a company to look at. So this is the video on Mastech. Please like and subscribe my channel, hit the bell icon so you can get my video straight away when I post it. And kindly do support me on Patreon. The link is in the description to get Patreon membership, or you can be on WhatsApp, and other links, and everything will be given to you. If you want to be a WhatsApp member, get the yearly membership, you need to email me and you'll get that. In that, you'll get at least 3-4 calls on a weekly basis, on short term calls, and also I'll discuss about the markets, and you can have one-on-one discussion with me. You can ask any number of queries to me as well.